Our final presenter of this wonderful two-day Elliott Wave Hub event is Carolyn Boroden. And let me introduce her now. Carolyn Boroden is a leading expert in Fibonacci price and timing analysis and has been a valued member of the Elliott Wave Trader Analyst team since December of 2019. A seasoned technical analyst and author of Fibonacci Trading, that's a McGraw-Hill book from 2008. Carolyn has been deeply involved in the trading industry since 1978, beginning her career on the floor of the Chicago Mercantile Exchange. Carolyn is a sought-after speaker at industry events, and her insights are often showcased on CNBC's Mad Money with Jim Cramer in the Off the Charts segment. So I'd like to welcome Carolyn Boroden.
Okay, welcome everybody. What I want to give you today is an introduction to advanced Fibonacci time and price analysis. My guess is that many of you are familiar with some Fibonacci work, but I'm going to get into it in a little bit more detail. And I should have time at the end for some questions, but I'm going to go ahead and get started here as long as everything is working technically. And the first question that you're going to want to ask is, why use this type of Fibonacci analysis? Well, it's because it enables you to identify high probability, relatively low risk trade setups where the risk is clearly defined along with the targets. Now, this type of analysis works on any time frame and essentially any good market data. Now, I'm not really going to run setups down on a 1-minute chart, okay, but you will see these patterns run over and over again, even on those time frame charts. Now, I've applied this method to stocks, ETFs, futures, and the Forex markets. And also I have run, Bitcoin in the past, and it does work very well there also. It is an excellent methodology to use with options strategies. Now, I used to work with a group that pretty much only did options, and you don't have to use options, but it is great to use with those, or you can just, trade outright if you like. And we also do futures besides stocks. Now, one of the other things is that you can see things in the market with this work that you will never see using indicators alone. Now, I'm going to start with a few of the basics, and it might be a little bit boring for those of you who have seen this before, but then we're going to get into the good stuff after that. As far as the Fibonacci number series, if you don't know what it is, it's right here. Okay, and basically the series continues, by adding the prior two numbers to give you the next number, and it goes out to infinity by adding the previous two numbers. Now, what you're going to find, though, is that in between these numbers is the golden ratio, okay? The golden ratio being the 1,618. So, for example, if you take the number 21 and multiply it by 1,618, you're going to get the next number in the series, 33.97, which is, basically 34. Or 55 times 1,618 is going to give you essentially that next number at 89. So in between these numbers is where we find the golden ratio. We're not actually going to use the numbers for the analysis. We're going to use the ratios derived from the number series. So the ratios that we're using all the time, 382, 50%, 618, 786, 100%, 1.272, and 1,618. And then some confirming ratios, or if there's a really, really large swing, I may also use 0.236 as a ratio. I do use 2,618 as my third target for any trend setup. And every once in a blue moon, I will use this 4.236. You have some crazy runaway swing. Sometimes you run that and it will actually offer, support or resistance depending on which way you're coming from. Now, I told you where basically, the golden ratio came from, 618, 1,618. That came from in between those actual Fibonacci numbers. But where do the other ratios come from? And you just have to know that they are all related mathematically. Okay, so for example, 1 minus the 618 gives you the 382, or the square root of 618 gives you the 786, or the square root of 1618 gives you the 1272, and so on. They are all related mathematically. So what we want to start looking at first is what types of price relationships we run with the Fibonacci ratios. And I'm going to start with retracements. Now, many of you will already be familiar with this, but basically what we're doing is we're taking a prior low to high swing and then running the potential support using these retracement ratios, 382, 50%, 618, and 786. And, occasionally I will use that 236. Or for possible price resistance, I'll run the prior highs to lows on the charts using the same ratios, looking for potential resistance. So just a simple example, this is a daily chart of square, okay? And here's where I measured a prior low to high swing. And then here we ran the retracement ratios. And in this case, you didn't really see anything at 382 or 50%. But when we did get into the area of the 618 retracement, we did see, a healthy reversal from there. And then later on, as we go through the presentation, I'm going to answer the question of which retracements do you trade against? Because you don't want to trade against every ratio and say, oh, well, maybe this will work. Well, if it doesn't, maybe this will work, or maybe this will work. We have ways of looking at it that are going to help you. Another example of a retracement, this is on the flip side. This is a 30-minute chart of the stock AMAT, measuring a high to low swing, running the retracements. Nothing really here. We did have a minor reaction at the 382 retracement. We also had a pretty minor reaction at the 50%, but where we ended up seeing a real reversal here was, again, right at the area of the 618 retracement. Now, it's not always going to happen at the 618, but 618 is very important, and you always do want to watch that retracement. All right, so that's the definition of a retracement. As far as the next type of price relationship, I call them Fibonacci price extensions. Now, this can get a little bit confusing because some of the other programs have the three-pointed tool as the extension tool. All I know is if you want to run extensions, you're still using 2 points on the chart. Typically, you're using still the Fibonacci retracement tool, in your program, but you're adding the ratios that extend beyond 100%. So basically, we're using 1.272 and 1.618, and then also occasionally 2618, like in the case of, a third target for any of the trend trade setups. So again, we're going to run a low to a high, use these extension ratios for possible support, or we're going to run a prior high to low, extend upwards using those same ratios, and look for possible resistance. So here, I should have an example for you. Okay, this is actually a daily chart in Facebook. Now here, I have more than one example. I have a prior high to low here, and I ran the extensions, 1272 and 1618. And in this case, we actually saw a reaction on 2 retests of this area of resistance. So here and here, you definitely saw a reaction off of that. But here's another example on the same chart, taking a prior high to low, looking for possible resistance. Didn't really see anything at the 1272 in this case, but when we did get to the 1618, it looks like maybe within a few pennies, we also did see a very healthy pullback after that extension was reached. So again, it's always potential support or resistance. It's not always going to work. Another example of a price extension. This is a daily chart of Intel stock. Here's where I measured a prior high to low swing. Here's the 1272 extension, which didn't really give us a turn. But then we got to the 1618 extension. And in this case, this was a perfect hit. I'm not always looking for perfect hits. You want to be near, this resistance visually, but sometimes it is a perfect hit. So the high to low extension gave us 50.85, and the actual high in this case was 50.85. And we did see a healthy pullback after this was reached. Also, one of the things that I constantly repeat, in the trading room is that many moves tend to terminate at extensions of prior swings, even if it's just temporarily. So typically, we're looking at this, we watch here, you start trailing up your stops just in case. You get stopped out, what do we do next? We go and we set up the next trade after that. All right, I think this is one more example of a price extension. And in this case, since we're coming from a low to a high, we're looking for possible support. This was actually a weekly chart. It's really old, but it was in CMG. Here's where, the market just kept going lower and lower. The chart looked horrible. So to get some perspective, I looked at the weekly chart. Now I found that we had already gone through this 1272 extension of the prior low to high, but the next one came in at 262.71. And that was the 1618 extension. Now, in this case, the actual low was made at 263 even. Again, not a perfect hit, but absolutely close enough. This doesn't look like it was a major rally after that, but it was $82.88 off of this low. So definitely worth watching these levels. All right, so the last type of price relationship that I run every day is called, or what I call, a Fibonacci price projection. And again, this is, the three-pointed tool. I think it might be in Thinkorswim or something like that. I think they call that a projection tool. Doesn't matter what they call the tool. It just matters that you choose 3 points on the chart to come up with these levels. So for example, I'm running a prior low to high swing, and then I will project from a secondary low to look for possible resistance. Now, I mostly use 100% or symmetry, which I will get into shortly, and sometimes 1.618 for these projections. Okay, now if you wanted to look for possible support, we'll take a prior high to low swing and project it from another high using those same ratios. So let's look at couple examples. This is actually a chart of crude oil, a daily chart. Here in this example, I'm showing a price projection of a prior high to low swing, because many swings tend to be similar to other swings on the same chart. If you look at some of these, you'll say, oh, this kind of looks similar, and this looks similar, and maybe that's similar to that. Well, I measure those, so I know exactly where that's coming in. So this prior high to low, that was $3.12. I projected that from the next high to look for possible support. Well, it said to watch for possible support at 55.87. And the actual low in this case was 55.88. So this was only the difference of a penny. Okay, so knowing that there's possibly support there can be extremely helpful. Now, you did have a nice initial rally off of this symmetry level, but though we did come back and kind of retest that area and then saw a huge rally after that. But these are really important areas to look at, the symmetry projections. So symmetry is essentially similarity or equality when comparing swings in the same direction. And you can see that here, we definitely had similarity, $3.12 versus $3.11. Okay, here's another example of a projection. This one also includes the 1618 ratio. Here, I've measured a prior low to high swing. And then again, we always use the 100%. But if that is blown through, the next one comes in at 1618. Now, the 1618 projection came in at 1097.88. The actual high in this case was made at 1097.51. Again, I don't want to show you like everything is hitting perfectly, because if you look for that, you're never going to find it. You just want to be close. Okay. So you can see that here, when we did get to that 1618 projection, we did start to see a pullback. This was actually a 60-minute chart in Google. All right, I think this is one more projection example. This is a 30-minute chart in S&P futures. And you can see that, the overall trend is down, lower lows and lower highs, right? So what do you want to do when that's the case? You want to look for a possible short. So what are we looking at? We're going to look at some of these prior rally swings and then project them from whatever new low comes in, if you get a bounce, to look for a new area for a possible short. Now, in this case, this was 91 points. We projected that from this low made on, looks like the Feb 27th. That gave us 30.97 as possible resistance or an area for possible failure. And the actual high was made at 30.96 1/4. So there's a difference there, 91 points versus 90 1/4. So these swings are similar. They're not equal, but they are similar. And this is where the market rolled over again for, a very, very healthy decline. And if you apply these in the market, you'll see that these levels can work over and over and over again. All right, let's get, okay, yeah, one more example. This was in Bitcoin. In Bitcoin, basically, in this example, it's again, symmetry. You're going to compare prior swings with the current swing. Well, when the market started rallying over here, let's compare it to how much of a rally we got off of these swings. So I projected both of these. One was 157.50 from this low. The other one was 171.90 from this low. And note that the actual high was made just a teeny bit through that first area, the 60 or 65, 115 area. Actual high was made at 65,200. All right, let's see what else we have. Oh yeah, and definitely healthy decline of 12,380 from what? Simple symmetry. So basically, 3 clicks of a mouse can give you one of these levels. And it could be worth quite a bit, absolutely, knowing where these come in. All right, so those are the 3 types of price relationships that I run: retracements, extensions, which are essentially retracements beyond 100%, and price projections, which is where we're comparing swings in the same direction. But then I do have 3 setups that I look at every single day in the markets, but one of the ones I always look at every single day is called a Fibonacci price cluster. Now, the definition of a cluster is the coincidence of at least 3 Fibonacci price relationships that come together within a relatively tight range. Okay, so we're going to go over some of those. But before we do that, I want to kind of show you one, starting with a blank chart. And the question is going to be, what would have told you to look at a buy in Tesla before this rally occurred? Why was that June 11th low important? And again, some people will try and answer the question, but it's basically a trick question because I've done it for you. So here is what I found on that Tesla chart. Here's the June 11th low. One of the price relationships I found was a 100% projection, a decline of $19.81 projected from here, gave me 167.07 for possible support. And you can see that these 2 swings are similar. They're not equal, but they're similar. That was one price relationship. On the same daily chart in Tesla, I took another prior high to low swing and found a projection. I projected from this high, again, for possible support. That came in at 166.97 area, another 100% projection. And again, these 2 swings, kind of similar. Let's move on. This is the same chart. This is actually a more minor swing that I used, but it still counts. This little minor low to high swing, 1618 extension of it came in at 167.43. Okay, so we've got 3 price relationships that came together so far. And then here's yet another. We have another low to high swing extended, the 1272 extension coming in at 167.23. Okay, let's see if that might be it. Yeah. So that's what created or identified this price cluster in Tesla. Okay. So markets trading down at the time. We have basically two 100% projections, a 1272 extension and a 1618 extension that all came in between 166.97 and 167.43. So when you have a cluster, basically what you do is you look at that as important support. Again, better than just looking at a single level. When you have three or more price relationships, it tells you that, it's a more important decision. And if the area holds, what you do is you go down to a lower time frame chart to look for what I like to call a trigger, price trigger that tells me it's worth placing a bet against this support. Okay. Because there are a lot of zones that the market will blow through every single day. We want to see something in the way of price action that tells us it's worth placing a bet. So this is just going to be a quick example of a trigger that I like to use. I typically use the 834 EMA crossover for an entry. So I'm going to look for a crossover to the upside for a buy or a crossover to the downside for a short. So in this case, we held support. What I like to see is the crossover. Here's where the 8 crossed. Let's see, I'm not sure if you can see that, but crossed above the 34. But what I also like to see is what I'll call a pattern shift. I want to see it also take out a prior swing high. Okay, because you basically want to see that you're shifting gears from a pattern of lower lows and lower highs to possibly higher highs and higher lows. Okay, so I like to see both of those things occur. The 834 EMA crossover, and then also either taking out a prior swing high for a buy or taking out a prior swing low for a sell. Now, your initial risk was either below this low, which is the low made prior to the buy trigger, or underneath the low end of the zone, which is what I gave you on the prior chart. So that's how it's supposed to work. The way you make money with this work is setup plus trigger equals a trade entry, and then you manage it. And managing it is basically, where is your initial stop? When are you going to trail a stop? What is your target? What is your exit plan? Are you going to use a trailing stop to exit, or you're just going to use, the targets that we give you for exits? Personally, I think it's better to use a trailing stop on at least some of it, because a lot of times we get way more than just target number one. All right, here's another example in Tesla. This is just like if you missed the first entry, because here was that first entry, June 11th, right? But there was a secondary entry that came pretty quickly, and it was from taking 100% of this prior high to low, projecting from here, 100% of this one projecting from here, and a 618 retracement at a low to the high. Gave us another cluster, 175.82 to 177.37. It was two 100% projections and a 618 retracement. And again, followed by a very, very healthy rally. So if you miss the first entry, we always work at, setting up the next pullbacks in any of the charts that we watch every day. All right, this one's a little bit more recent. This is a daily chart in gold. Now here I have a 786 retracement of this low to high. I had a 382 retracement of this low to high. And then I also had a symmetry projection, a high to low. And this decline was $62.20, projected from this high. Okay, it looks like the top end of that support is 27.59 area. Well, it wasn't a perfect hit, but it was absolutely close enough, because this was 62.20 and this was very similar at 61.90. This was the zone. This was the setup, 27.56.40 to 27.59.90. This is where it came from. The projection, 786 and the 382. Actual low was made at 27.60.20, which was within 30 cents of this support. So again, I don't want you to think it has to be an exact perfect hit. This was absolutely close enough. And we did see an eventual rally off of that area, which was $213.80. Okay, but we also did continue to set up the pullbacks all the way up. And actually we have one right here. If it doesn't hold, it's not going to look good, but right now it is holding in gold if you're trading that. Okay, another example. This is TLT, and here I found a 618 retracement of the low to the high here. I kind of color coordinated it so you can see where it came from. I have a, what was this other one? Oh, I have a 1272 extension of this low to high here. And then I had a 100% projection of this high to low that was $3.39 and projected it from this high. And that gave us, you know, the 100% projection in here. It looks like it was at 86.79. So we basically had a cluster from these three different price relationships that came in between 86.68 to 91. It hit, it held, it triggered, and you can see how these two swings are similar. That's the symmetry. And so far we've seen a rally of $4.64 off of this area of support. Okay. Let's see. One more. I'm probably not going to go over too many more of these because I do want to also get into timing, which is pretty interesting for those who've never seen it before. Now here in IWM, again, another cluster. Here I had four price relationships because we had 786 retracement of this low to high. You had a 618 retracement of this low to high. You had a 100% projection of this high to low projected from here. 100% projection of this high to low projected from here. Gave us 194.80, 195.19. It hit, it held, it triggered. Actual low was made at 195.02. And that was directly within this zone. And in this case, we met two targets on the upside. Okay, that's how it's supposed to work. But what if we're wrong? Well, if we break underneath here, get out. Okay. Well, actually, this I do want to show you this example because it's a daily setup that we had in Netflix, but you can also use my daily levels for day trade decisions. So here's where the support came in, and we knew that. And then if you went to actually a 1 minute chart, here is where we put in that low. Here is where we took out the prior swing high. And here's where we had the moving average crossover. So once both of these occurred, you know, it triggered around the 664 area and, you know, saw a beautiful rally off of a daily zone. Okay, because it probably wouldn't have even triggered yet for a swing trade entry. But you can use a 1 minute chart for an entry with not a ridiculous amount of risk because it did trigger relatively close. And again, your initial stop would be either underneath here or underneath the low end of the zone. Either one of those is fine. One more example. This one I actually did a video on last night on YouTube just to kind of go through how I came up with these levels and stuff. And again, it was, we took some projections of prior swings and then projected them from the high at that time right over here for possible support. I had, let's see, a 382 retracement of this larger swing. I had, looks like a 786 retracement of this smaller swing. And I also had low to high 1618 extension. So we had a kind of a wide zone between 226 to 230 area. But if you wanted to break it down into two smaller zones, you could have. And then the top zone would have been 228.96 to 230.09. So still a cluster. You can look at this as two clusters or just one big one. The bottom line, it hit, it held, it triggered. It gave two targets on the upside and a rally of $50.72. So the risk to reward on most of these is very good because let's say you're getting in maybe somewhere around here, you're risking to underneath here, but look at, you know, the potential reward. It's very healthy. Just another example, just to show you that, hey, when it doesn't hold, it also tells you something about the market. This was an old chart in the S&P cash. This is where I had a big old cluster of resistance, and it was like to fail or not to fail. But if it didn't fail, that you had to look at this as, well, then we should see a healthy continuation of the move instead. All right, so that's pretty much it for the price work. I'm going to go over timing, and then I'll take questions if anybody has them. So what about Fibonacci timing? Well, basically, we use the same ratios that we use on the price axis of the market on the time axis of the market. So, for example, we'll measure the time between a prior high-to-high swing and then multiply that time by the ratios and project the results in time in the future. When we see time clusters, we look for a possible change in trend. Also, when time and price come together, you have a much higher probability trade setup. So here's an example. This was in Facebook on a daily chart. And, it was an old example that I used to show, how I came up with a cluster. But not only did we have a cluster in Facebook, when it pulled back into the cluster, this is what we also saw. So with timing, if you measured this high to this high and multiplied it by the ratios, I'm not showing all the ratios. I'm just showing the ones that worked in this case, or that we were looking at, the cluster in this case. So July 19th, that was the 618 in time. Then we had a low to high, 100% in time of that low to high came in on July 20th. Then we had a low to low swing in time. And then there was a 1618 projection in time, July 19th. And then also another low to low cycle, 786 in time came in on July 21st. So we had timing cycles due between the 19th through the 20th. Now, if you are trading down into the timing cycles, you anticipate a reversal back up. If you're trading up into the time cycles, you're looking for a reversal back down. If the market's going sideways, forget about it. It's not going to be helpful. Okay. So if you're not seeing a direct move into the cycles, I pretty much, ignore them. It could also be a place where the market accelerates the move instead. But, this is the way I'm looking at it for possible reversals. And when it matches up with my price work, that's the best. Now I'm going to show you an example. I do have a Twitter channel under, Queen of Fibs. And I did, well, I showed this later because my clients got this first, but we had timing by using a timing histogram in the Dynamic Trader software, which was created by my mentor, Robert Miner. I took the last low and I measured, or I also told the computer which swing highs and lows I wanted to use in this analysis. So I used all of these. And then what I did was project from this last low for the next possible high. Okay, now it gave me a histogram that showed me some standout dates that came due between the 19th through the 21st. And usually you'll see it down here. This means I'm looking for a possible high, because the histograms have a directional bias. So if you're doing a histogram for a high, it only counts if you're still going higher. Otherwise, you have to run a new histogram. But here, again, we projected from this last low for the next possible high and came up with the dates of the 19th through the 21st, about a week ago. And I want to show you what that histogram looks like. So here's the histogram that it spit out. And when you see the standout dates, this is when you pay attention. So these standout dates came in here. Here's the highest scoring dates, the 19th through the 21st. So we knew that we were going to look for a possible high, within this time window, plus or minus a day. Okay. You want to give it a day wiggle room on either side as far as the cycles are concerned. It's not always going to be perfect. But here, in this case, I believe, whoops, let's go back to this one, made the actual high on the 19th, which was directly within that time window into the decline that we had. This is just missing today's data. But we did see a healthy decline initially off of there. That was 238 or 238.94 in S&P cash. Okay, now here's another example of timing. And here, let's see. Yeah, and if anybody wants a copy of the PowerPoint, I'd be happy to give it out. But here, for example, we had a high to high, 618 in time, August 22nd. This was NASDAQ cash. Another high to high, 100% in time. And you can go back and check these. You can do it on Thinkorswim or any other program. But okay, we had another date on the 22nd. We had another high to high, 100% in time, August 23rd. We had a low to low cycle, 50% in time, August 23rd. A high to low, that was this high to this low in time, 786 in time, August 23rd. So you had August 22nd, 23rd. What was the market doing into August 22nd, 23rd? It was going straight up. So that told us to anticipate a possible reversal of what the market was doing at that time. We got the reversal, and it just happened to coordinate with some beautiful symmetry. These two swings were very similar, 2501 versus 2503, plus a 786 retracement of this prior swing. Okay, so here you get time and price. You wait for the trigger. You place your stop, above this high or above the area of resistance. And then, trail it as you go. We might not make the downside target fully, so you trail it just in case we don't. And I think this is the last example. But again, another cluster of time cycles. High to high, 1272 July 16th, high to high, 786 July 16th, high to high, 100% July 17th, low to low. 618 July 18th, low to low, 100% July 15th. Ooh, I didn't include the 15th in here. It should have said 15th to 18th. Okay, just found a little error. And then a low to low, 1272 came in July 16th, another low to low, 50% came in July 17th. So basically between the 15th through the 18th, we had 7 cycles. And what were we doing? We were trading straight up into the cycles. So we wanted to anticipate a possible reversal, which means if you're long, ratchet up your stops on your longs, which means if you want to get short, see if you start getting reversal signals against those same cycles. And that, I think, is that is my last slide. So I'll probably just reopen it from the beginning again. And then if you guys have any questions or something you want me to go back to, I can take a look at that now.
There is a question for you. Should we enter as soon as we see the trigger, or should we wait for some candles? More specifically, how did you choose the trigger when it is sideways? For example, like Google last week.
Well, I'm gonna have to let me see if I can get my Google chart up, because I don't 100% remember it. Actually, I was on a cruise last week, so I don't. I did look at it, but I didn't spend a whole lot of time with it.
Okay, so then why don't you just answer the question? How I think you
I
answered
just
it
do
already.
it, yeah. I mean, if you get the crossover and you take out a prior swing high, I would just enter. If you wait for confirmation after confirmation after confirmation, you're probably never going to get in a bunch of trades. So, I mean, as long as it does the two things that I, want it to do, you can take the trade. Some people will say, well, because this went a little bit further than I wanted to, I'm going to wait for a little bit of a pullback. That's okay too. That's a judgment that you can make for yourself. But I say it's okay to, once you get the trigger, as long as it's not some sort of gap where your definition of risk is going to be too high. If that's the case, maybe you stay away from, a gap opening. But I was going to try and look at the Google thing. I mean, on a lower time frame chart, if I was watching the 30-minute chart, I mean, this is still in a sell mode here. Now, was there a false trigger over here? I don't know for sure. I mean, there is a crossover and it did take out a prior swing, but I don't know if this was against any support on the chart. But if there was, then this would have been a trigger and it would have gotten stopped out. But if you're looking at the intraday chart, it's not really sideways. Let's see what else. Is your method only using what you're showing, or are there deeper methods? If you learn to do what I just showed you today, you should be able to make money with this market. Well, if you have the discipline to follow a trading plan and good psychology. And that is extremely important, because if you don't have that good psychology, you can screw many things up. I'll tell you that I have you know, a lot of members in a room, and everybody gets the same work, and some people do extremely well with it, and others are still struggling, you know, or getting chopped up, or maybe they set it up where their stops are too close or something like that. But you know, that's where I think the psychological stuff helps you also. And how long do I think it would take to be profitable with the methodology? It really depends on the person. I've had people that show up in my room after 6 years of not making money and then tell me, I followed your plan and I'm finally making money for the first time in 6 years. And again, it's not going to happen for everybody, but it does happen often enough. Let's see. Are the probabilities different when using the higher time frame? No, well, you know what? I think that there's a way that I look at the trade setups. The ones that have all the moving averages on the daily chart on the same side are ones that I want to focus on. If you constantly look at the counter trend stuff, and maybe you don't wait for a good trigger or something like that, then the odds are working against you. So there are ways to make your probabilities higher, and that's by looking at the highest probability setups. And I have that, it's probably, I believe it's on one of my YouTube videos. And I think as far as the day trading with these levels, I mean, I think that's where you're kind of risking the least amount, because with the swing trades, you know, I definitely have you wait for much more of a reversal before getting in, which means that the risk is going to be a little bit higher at that time. So the risk is probably a little bit better on the intraday stuff. What criteria do I use to determine the high and low points? It's just something that I eyeball, you know, I kind of look at it. I don't know how my brain works as far as kind of looking at it, what's going to work mathematically, but I'm looking at key highs and lows. And I do have some points about that in my book as far as how I would choose those. And okay, somebody bought my book and didn't understand price projection setup on the fib tool. Okay, well, what program are you using to, you know, to need that? Because I know I have, you know, for me, this is Dynamic Trader software. I use this 3-pointed tool where I can take a high to a low and then project from a high. So then I click on the high, click on the low, click on the high, and there's one of my projections right here. So it's using a tool that will allow you to choose 3 points. But if you're using Thinkorswim, you have to use Thinkorswim's 3-pointed tool. And I believe that they call that an extension tool. But if you want what I call a projection, you have to use the tool with 3 points. So if you can answer what, or let me know which one you have.
I think you're saying projection. Many of the platforms say expansion instead of extension.
Yeah, they call it well, I believe they call it an extension tool on Thinkorswim, but it's still the tool that allows you to choose 3 points. So if you want what I call a projection or what I call symmetry, you have to use the tool that allows you to choose 3 points. As far as the system for the learners, I could tell you that I have like a 7-page document, but I'm also trying to show you where's the about. I know that there is an about section in here, and I'm just, oh, here's the getting started, you know, there's the schedule, and then it goes into understanding the strategy, triggers, it gives you, a trading plan that you can use, and so on. So there's definitely information in there. And of course, we're in the trading room during the day. So if you have any questions, you can ask questions there. And I also have, I think, about 50 YouTube videos. Yeah, as far as trading view, I don't know what, it might also be called an expansion tool. So, or extension tool. Just ask TradingView, which is the tool that allows you to compare, two swings in the same direction. I'm pretty sure, though, that it would be an extension tool. I don't calculate the time. Basically, the program calculates the time. But for example, the way it would work is, okay, so here, let's look at this. High to high. Okay, so from this high to this high is 13 weeks. It's actually a weekly chart. So here, if I use the timing tool, I'm going to click on high to high. And for example, 13 weeks forward, it's going to show you, where that 100% cycle comes in. And that is, the week ending October 11th. So basically, you click on the two dates, and then the program does all the mathematics for you and projects forward. And typically, if I'm doing analysis like this, I get rid of, remove the stuff from the past and just kind of show what I have in the future. And I think I have something. Yeah. So for example, here I've got a crude oil chart, and the market's going straight down into some support in crude oil. But I have cycles here, the 25th, 24th, 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 25th. So the 24th, 25th is one time window to anticipate a possible low developing. And then the next one, via the histogram, which I projected from this last high here, is giving me 227 to March 1 to also anticipate a possible low. So if it matches up with this work and then gives you a buy trigger, is it worth looking at? Yes. But in this case, you have to look at this chart, and all of the averages are on the side of the bears, and the pattern is lower lows and lower highs. So is the buy side the greatest place to be? Not necessarily, not if you're a trend trader. Okay, but is it, a decision coming up? Absolutely. Okay, all right. I'll see if maybe Jody, I can send you a copy of my PowerPoint. I had just kind of adjusted a few of the slides last night, so I can give that to you in case anybody wants that. And did I miss any questions? And I know it sounds like I give you a lot of information, but little by little, you will be able to find, some of your own trade setups like this if you're willing to do the work. If you don't want to do the work, then we do the work. You guys are welcome to a 2-week free trial in the trading room if you do want to see what we actually do in real time.
Carolyn, I actually read your book way back when.
Oh,
When
you
did
did?
it come out? Yeah, I did. When did it come out?
2008.
Yeah, that's why I said way back when. I don't remember when I read it. Probably 5 years ago. Yeah.
Yeah.
Yeah. And it was, great book. Great book.
Good. Thank you so much.
Yeah.
It's hard. Sometimes people will look at it and their brain will be scrambled. But honestly, I do the same thing when somebody tries to explain an option strategy to me. My head explodes because it takes a little bit of focus and probably to let the fear go about what you're looking at, because it's not that difficult. I know that I trained one of my gals that works with me in the trading room. She sat next to me for 3 months, and she got started doing all of the price work within 3 months. I just said, okay, now switch computers, and she took over.
Oh, great.
Yeah, so it is doable.
Yeah. Like everything, it takes focus and dedication.
Absolutely.
You do have 2 more questions.
Okay.
Maybe, does this work well for any product? Like, would this Fibonacci method work on Forex pairs too, or is it more adapted to stocks like in
No,
this
it
example?
will work on Forex pairs also. I've done some of that work in the past. And it does work on Bitcoin, and I've done it on, used it on Ethereum and stuff like that. As long as you have decent data. Like you can't tell me I'm going to give you a chart of a penny stock and I'm not going to be able to figure anything out on, a few days of data that, is on a penny stock. But almost everything else that most people watch, I follow a bunch of stocks, Amazon, Google, Tesla, Nvidia. I follow gold. I follow S&P futures, NASDAQ futures. I do some extra charts. I've got gold and silver. I've got Meta. I've got, just a number of different charts. But, if you give me something with almost, like 3 days worth of data, I'm not going to be able to do the analysis. All right. So question, how much confluence am I looking for to find support and resistance? Well, the price cluster, or the 3 setups I use, price cluster is 3 price relationships or more. So in the crude chart that you're looking at, this is a price cluster with about at least 4 price relationships. Symmetry is another setup that I use. Now, symmetry by itself, so if I just had this level here, 66.96, I consider that a setup by itself. So symmetry only needs 1 level. And then the only other type of pattern I look at is a 2-step pattern. It's more like a Gartley pattern. And honestly, you don't see those that often. So all day long, I'm running multiple price cluster setups, multiple symmetry setups. A lot of times, there will be other price relationships that overlap symmetry. So I do like some of the clusters, or the best clusters will be the ones that include symmetry in it. And like I said, you want to, I did start running some new videos. I'm going to start running a couple videos a week on YouTube, and showed some examples of, like the most recent one was how I ran the original setup and then how I'm running a current setup. And if you start to look at those, things should start to click.
How it evolved over time. Right. Well, Randall is asking on the chat box, can you show a live chart of the S&P?
Well, let's see.
I guess he wants you to take
Yeah,
us
it's
through your
coming.
thought process.
It's going to take a minute to open up. All right, that's the weekly chart. This is the daily chart. This is where we have some, timing to watch. I have timing factors. I have price support. On the flip side, I show the example of when we put in this high into timing. Well, now I have histogram timing on the other side, 26th through March 1st. But I have outright cycles, kind of like, I just broke this down into 2 periods, the 24th, 25th, or the 27th, 28th. So I don't like the fact that the 513 is in a sell mode. I don't like the fact that we're below the 50. It tells me that even if we do get a bounce with timing, you have to absolutely be prepared for a possible failure because of where we're at with these moving averages, along with the fact that we did take out a prior swing low here. And again, I do end up, we have like a morning video that's done by Tammy, and then I do the end of day video to get all these charts prepared, more of the daily chart work while the girls focus on, I've got Shannon and Tammy doing the actual charts in the trading room. During the day, I have 8 charts up that you can actually trade against live. Now, we also do intraday timing on typically a 120-minute chart or a 30-minute chart, which also helps when we have a setup, if it also matches up with timing.
How long is your trading room open?
From the market opening till the close.
Wow.
So I mean, for my time window, it would be 6:30 till 1. you know, 6:30 a.m. till 1 p.m. I'm in Vegas.
3 hours.
Yeah.
Oh, fantastic. Any other questions? I don't see any other questions. This was great, Carolyn. We really enjoyed having you on the Elliott. I can't even talk. The Elliott event.
Well, thanks for having me.
Yeah. No, it was great.
And if it doesn't make sense, don't give up. It just takes a little while to, you know, to sink in. I'm a high school dropout and I got it. So
listen to Carolyn, okay? She knows what it takes to succeed.
Yep.
And yeah, that's great. So thanks so much, and hopefully you'll come back for our next event. And I'll just stop the recording now.
Okay, great. Thanks for having me.